Welcome to Talk Law Radio with attorney Todd Marquart of the Marquart Law Firm at marquartlawfirm.com.
Welcome to Talk Law Radio. I'm here with Pete Sepp with the National Taxpayers Union. We've been talking about the One Big Beautiful Bill Act and what reconciliation means, what changes the Senate is likely to make before it sends the bill back to the House of Representatives. And we've been talking a lot about the National Taxpayers Union as an organization and all of the things that they do. And in this segment, Mr. Sepp, I want to talk about the Tax Cuts and Jobs Act of 2017, which is set to expire or sunset at the end of 2025. How can we get that extended?
Well, there is a lot to extend, and the 2017 law has been vital in the economic growth factor that has made our economy successful until very recently, I'm afraid. But the 2017 taxpayer relief law that President Trump signed made sweeping changes both to the individual and business portions of the tax code. For example, individual tax rates went way down. Originally, they were 10% all the way up to 39.6%. They went from 10% to 37%. The median rate went 3 percentage points down. That doesn't sound like a lot, but when you're looking at $50, $75, $100,000 of taxable income, yeah, those 3 percentage points make a big difference. The standard deduction, yes.
I think most people would appreciate getting a 3% pay raise.
Yes. And I mean, the list goes on here because the child tax credit, for example, that was only $1,000 per qualifying child, doubled under that law to $2,000. And we have to bear in mind that's a credit, not a deduction. In other words, a direct amount of tax that you no longer have to pay. $1,000 less tax for every qualifying child. That's huge. If you have a family of 3 qualifying kids, you suddenly had $3,000 more in your pocket every year because of this law, on top of the reduced tax rates, on top of things like a new credit for small business income. Now, this, I should say, this is a deduction, not a credit, but if you have a small business, if you're a consultant, if you have, a handful of employees, or if you are self-employed, you could qualify for a 20% tax deduction. Now, if you had $50,000 of small business income, which is quite possible, what that means is you get to shield $10,000 of your income from taxes. And say you're in the 22% tax bracket. Well, that's $2,200 worth of tax savings. And so once you start doing the math here and you realize, okay, let's look at a 2-earner household. One has a wage-paying job, the other a small business inside the home, 3 qualifying kids. This 2017 law could easily save a household like that between $6,000 and $7,000 every year. That is a meaningful amount of tax savings.
And so you haven't been talking about millionaires and billionaires savings on tax dollars. You've been talking about regular working people. Is that right?
Yeah, that's right. And the biggest secret of this law is that it actually made the tax code more progressive. Progressive being that higher and higher rates fall upon folks with higher and higher incomes. The left in this country is very fond of criticizing the 2017 law for supposedly giving away a lot of money to the rich. Well, first of all, it's your money to begin with. The government is taking it from you, not giving it to you. But
Right.
setting that aside, the fact is that since the passage of that law in 2017, the top 1% and top 10% of taxpayers are actually shouldering a little bigger share of the current revenue load than they were prior to 2017. So it has become more progressive.
And so what happens if this Tax Cuts and Jobs Act does expire? What's going to happen to those regular people?
Boy, it would be a nightmare scenario. You think, okay, the child tax credit gets cut in half right away. If you have 2 kids or 3 kids, that's a $2,000 or $3,000 tax hike right off the bat. Your individual tax rate goes back up. If you were, say, in the 25% median bracket, or the 20, I'm sorry, the 22% median bracket, you'd be paying 25%. Your small business would no longer have that 20% deduction. The standard deduction would be cut virtually in half. The dreaded alternative minimum tax, a very sneaky tax law that all of your listeners should be aware of, that would come back in full force. Somewhere between 6 and 7 million households across the country would be affected by that. So, all kinds of terrible implications at the worst possible time. Trillions of dollars in additional taxes over 10 years.
Do you think that it would have been a better idea just to focus on extending the 2017 Tax Cuts and Jobs Act rather than rolling it into something like the one big beautiful bill that includes so many other things?
Yeah, ultimately, I think that's a good question because we see in some of these provisions that they're only temporary. In other words, they don't survive past 4, 5, 6 years. And so you have to think, well, wouldn't we want to make that full and immediate expensing a 10-year or permanent provision as opposed to just 5 years? Would we want the additional child tax credit? This bill provides an extra $500. Well, but it's only doing that for 4 years. So you have to imagine if we could kind of clear out some of the campaign trail promises and other tweaks and credits and bonuses and whatnot, and just say, look, we're going to take all of the revenue impact from those provisions and we're going to plow them into making the 2017 laws permanent across the board so taxpayers can always count on them, at least reasonably count on them. I think that might be a better way to go.
You mentioned the entitlement programs, Medicaid and Medicare, and one of the criticisms that I read in the news about the One Big Beautiful Bill Act was that uh, when the when the budget exceeds a certain amount, when the deficit exceeds a certain amount, it triggers something called sequestration under the Statutory Pay As You Go Act of 2010. Uh,
Yes.
can you talk about that a little bit?
Yeah, in 2010, a statutory law was enacted. In fact, it was a fight over whether to raise the legal ceiling on the national debt, and an agreement was reached to have yearly caps on a part of the budget that's called discretionary spending. That's the part that funds those roads and defense and other items through annual appropriations that I mentioned earlier. It's not the whole federal budget. It doesn't include the entitlements that you just mentioned, but it's a decent part of the budget. And those caps were supposed to be hard and fast, limiting spending in Congress. They worked for about 4 or 5 years until lawmakers started suspending the caps for what they saw as an important emergency. we have a national security problem giving foreign aid out, and we need more money, so we'll exceed the cap just for this year. And it just snowballed to the point where the spending caps have been pretty badly weakened. Well, the one big beautiful bill is basically saying, look, we're going to have an enforcement mechanism here so that if the federal deficit gets out of control, as much as $1.5 trillion and perhaps even $2 trillion, depending on the procedure that's invoked, will be clawed back over the life of the bill. Now, again, that does not mean that spending will be cut by that amount. Rather, the rate of increase will be slowed. And that's why you see the federal deficits persisting despite the fact that there is all of this spending restraint in the bill. It's still not enough.
So the media makes it sound like that sequestration is going to cause cuts to Medicare and Medicaid, but I think you said that only happens to discretionary spending, not entitlement spending.
That's right. And there is a provision in the one big beautiful bill for Medicaid reforms, not Medicare, Medicaid. And I mentioned that earlier as a reminder. What they're proposing here is not to actually cut Medicaid spending, but rather to slow its rate of growth. Instead of 4.5% a year of increase, it'll go 3% a year of increase. So I'm afraid, yes, this might mean adjustments in the program. Some things might not be as generous going forward in Medicaid benefits, but that doesn't mean that there will be cuts for millions of people to have to cope with.
Yeah, well, thank you for explaining that, because the media has been harping on that. We're nearing the end of this segment. In our next segment, I want to talk about your legacy, or what legacy means to you or to the National Taxpayers Union. And so I hope that that's okay. You can share as much or as little as you like, but for now, we've got to take a break. We'll be right back.
This has been Talk Law Radio with attorney Todd Marquart, brought to you by the Marquart Law Firm. You can learn more at marquartlawfirm.com. And be sure to listen to the full Talk Law Radio show Saturday mornings at 11 on 9:30 a.m. The Answer.
Each week, attorney Todd Marquart talks about the law. His mission with the Talk Law Radio show and podcast is to help you discover your legal issue blind spots. In the beginning, God had one law. Don't eat from the fruit of that tree. Then came the 10 Commandments. Now we have federal, state, and municipal lawmakers that won't stop creating new laws. Laws that might impact you without you knowing it. Listen to the show and drop a line on Facebook or email host@talklawradio.com and let the host know what you think of the show, the topics you want to hear, and whether you want to be a guest.